Hi, this is Mark with your analysis for the week commencing the 24th of March. Impossible to predict what's going to happen tomorrow because of the fact that over the weekend this Cypriot situation is still dragging on. There is a Euro meeting taking place as I speak with all the different finance ministers, and it really is a crucial time. So trying to predict what price is going to do tomorrow would be silly. However, I showed you during the week how I trade gaps. And just to give you a quick refresher on the subject, last Sunday the previous Friday the market had closed up here around 30.70, and on the Sunday night the market opened down here 165 pips lower. In other words, there was a huge gap. Now, what I'd said last week is I would be interested to take a bounce off 12900. And therefore at the market open the price has dropped to an area I have pre-estimated the price will go, and I had a plan that if price got down there that I would take the long. And the theory behind gaps is you will find that gaps close as often as 90% of the time, or certainly 80% of the gap will close. It's all a little bit messy, but it can be traded, and they can be traded very profitably. Of course there are no guarantees, and this weekend being particularly explosive potential news, then it could be worse than ever. However, what I am going to do, I am going to look again, if price drops at 129 at the market open, I will be interested to long. If price was to race up to 30.70, I would be looking to short. And for the 129 figure, I'll go into longer time frames and I'll show you what I mean. This is that Euro USD on a weekly chart. Last week, as I say, price dropped down to here and then promptly bounced back up again. So potential longs for me around 12900 rather. Then for the shorts, the reason I'm interested in the short is multiple reasons. Here on this weekly chart we have got the 55 and 34 EMA, and we also have the 61.8 fib. If I go on to a daily chart, you can see here clearer, we've got this fib arrangement I've just shown you. We've got fib, the recent high to the recent low, and 78.6 again. So there's lots and lots of reasons why I would be interested to short in this area anyway, and therefore if price gaps at the market open, that is the place I will be looking. And this is how I do it. And if you're going to trade gaps, I recommend you do the same. You do your long-term detailed analysis, you put lines on where you think that price may react, you make a plan before the event, and then if we get the gap, you take the trade. And as I explained to you the other day, if you've predetermined 12900, you just take it. However, another way to do it, you can wait for the first hour's candle to close, place your stop just below, then take it. You can wait until the 8 o'clock London open. So there's loads of different options with this. I used to use a standard stop on the Euro USD of 25 pips, but as I showed you during the week, what I also do is I look across to the left and have a look and see if there's anything else that has been a strong major area of support. So for example, if I saw something that meant I needed a 35 pip stop because there was a strong EMA or a major area of support and resistance, I would use that for my stop. And once again, you need to calculate the gap. And for any gap less than 30 odd pips, I just don't get involved, I just walk away, there's no point. But a substantial gap like we had last week is the potential to make a lot of pips in a relatively short space of time. Often the gaps will close in the first few hours, and therefore you can be in and out of the market and away and finished for the week before London even opens. This is the Swissy. Now the Swissy last week, when price was up here, I was saying that the area I would be interested was this 9400, 93, 95 area, and it did it. But now price is sat on it, so what would you do as far as the Swissy goes? Well, with the Swissy, I would be looking down here, anywhere where we have these EMAs, and we also have this weekly 55. So there's a lot of things going on in this area here. So anywhere around 93.20, 93.30, if price drops at the open, then I will be interested to long at that point. If price was to bounce up, then you'd be looking maybe around 9,500, because last week, look, price failed to break around this area last week. So let's put 9,500 in there as a potential area to short from a gap. So So 94.87 I've got there. That will be the area. So anywhere around 94.80. If price does gap up to there, I will be interested to short. This is the British pound on a monthly chart. Now, we had that big break in recent months. At the moment, this candle has not closed. It won't close till the end of the week, but if it closes like this is a pin bar reversal candle. However, the way I will be playing this is if price gaps at the market open, then hopefully 153.80, as you can see here, would be the area I will be interested to take a short on this pair. Even though the euro is the currency that's under scrutiny at the moment with the Cypriot situation, it's likely to have a knock-on effect for every pair against the dollar. And 53.80 was the area I was looking at on that longer term chart. We've also got 50% fib not that far away. That is the major land in the sand for me if we get a gap at the open. Euro pound is trickier. Last week I'd suggested a bounce at 85.20. It did it almost to the pip. But we've now broken and closed below this area. I'm actually interested with this, not for gap trading, because now they're difficult. I mean, if we get a bounce up to 8700, then clearly, yes, I will be interested, but that will be a huge gap on this pair. But I am interested for a conventional trade on this pair. We've broken 85.20. If price breaks and closes below 8500 on a 4-hour chart, I will be interested to short this pair. Conversely, if price was to break and close back above 85.20 with a bullish candle, then I will be interested to long, but I wouldn't be thinking in those terms at the market open. At the market open, you need to find a major area of support and resistance. I suppose a gap down anywhere around 85.50 might be of interest, but to say potentially it's not the best option from a gap trade other than a bounce up to 8700. And equally, if price does meander up there during the week, then be looking on 4-hour charts for potential bounces back down again. The Aussie dollar on a weekly, and on the weekly price failed to break and close below that fib. So once again we had all these months and months and months where fibs were very important on this pair. They've done it again. The week before price broke back through this 61.8. We now look as though we're on the move back up. I will be interested to long this pair anywhere around 103.70, 103.80 because of the fib situation. And also, if you have a look here on the daily chart, you can see 104, you've got a lot of major previous support and resistance. 103.80, that preferred area. And all these EMAs are rolling over. We've broken a fib, and MACD's now going more back in our favour. So I am interested to long this pair anyway. And if we get a big gap at the market open, then here I would be left looking for a potential bounce up. And definitely if it gets back down here. From a gap perspective, if price gets up to 105 at the market open from a gap, I will be interested to short. So the theory behind all of this then is you are looking for major areas of support and resistance. And these are the areas that we're looking for every week anyway, but as I say, you need to mark them on your charts, and if you're going to sit there and trade the gaps, then mark on the charts where you think that price is going to react, and if price then does gap to those areas, then look to take the trade. Aussie dollar yen. Aussie dollar yen, the obvious area is still on this pair, 97.40. Didn't quite get down there last week with this candle. We're now getting a potential 5-8 cross. We have MACD divergence on this pair. We could be on for a pullback. The obvious area again, we're in an uptrend at the moment. 97.40 was huge previous resistance, and therefore if price was to come down here, I will be interested to long, either for the London Open gaps or just for a conventional trade. Similar scenario here, and this is how I do it as far as for gaps. Take everything else off, and all I look at is candlesticks and the area, the line in the sand that I'm looking for. Euro yen on a weekly, and on a weekly we've got MACD divergence suggesting price to turn down. We've had a 5-8 cross, although it's a little bit messy at the moment. Strange candle pattern for the last week or two. If price gaps down to 120.75 on this pair, and I will be interested to take a long. And I will be interested to long in that position anyway, because once again it was previous major support and resistance, and it's a bit clearer here on this daily. And the further point on the daily, you've got for confluence, you have 55 EMA, and you've got 78.6 fib on a daily, not too far below. So there's a lot going on. That will be the area, predominantly because of the fact it's previous major support and resistance, and now this intersection of 55 gives me a little more confidence as well. This is the dollar yen, and dollar yen last week didn't break that trend line, but we've had a 5-8 cross, stochastics have rolled over, we had MACD divergence before. The area is more difficult here in terms of gaps because you're really going to have to start looking at fibs and previous area of support and resistance on their own. The ideal place would be all the way back down to 9200, but also be looking at 9300. Not as clear cut. From a long-term trading perspective, I showed you last week number of ways to play this. You could be looking for a big pullback, and in which case 90-20 I will be interested to long if we get a big drop. I also showed you last week how you can trade a break of this trend line, and therefore at least on a 4-hour chart you wait for price to break, a candle to close, the next candle to come up on the next few, and then a break back down again. Final one is the CAD, the dear old loonie, and it went absolutely utterly nowhere last week. You can see here this candle pattern suggests the price opened and closed in exactly the same place, and therefore the market at the moment is in equilibrium, can't decide where they're going to go next. You can be looking for simple bounces off 10200, but it's tiny ranges and really I don't want to get involved. Best place for this lot is down here around this 10, and now I'd be looking in terms of 10020 for an entry because of the fact the 55 is rolling over and you've got the fibs there. But that would be the best option on this pair for me. But keep watching along the 1020. But on a daily, you can see here how messy it was last week. And it was Friday's range was only 44 pips, and the previous 30 are down to 57 at the moment. So it's not going a lot of the place. It's basically just meandering along this 200 EMA. The better opportunities elsewhere, I think, unless we get this big pullback I've just shown you. Okay, that's it. It's a short week with it being Easter as well. It could be extremely volatile at the market open because of the Cypriot news. If there's not a decision with the Cypriot news, then you need to be very, very wary about trading the euro at all until some news comes out. Because if they come out with a random announcement, let's say at 8:30, they suddenly come out with an announcement, the market is likely to go crazy and you'll get your fingers burned. So the best thing to do is wait for the news to come out, let the dust settle, then think about trading the euro. Unless, in my personal case, I will, as I've shown you earlier, be looking for bounce trades from gaps at the market open. Have a good week.